Thousands of Realtors took home ideas for building their business at the 2017 Realtors Conference and Expo in Chicago. The tax reform bill is out, and it's not good for homeowners. These stories and more on The Voice for Real Estate. Hi, I'm Stephen Gasquet with the National Association of Realtors. And what a week we've had in Chicago. 20,000 Realtors and their guests attended the 2017 Realtors Conference and Expo here, right in the hometown of NAR. It was a fantastic week as those Realtors learned how to cut their bottom line, how to increase their income, and how to build their businesses. Hundreds of educational sessions, and also the world's largest real estate trade expo right here on a wonderful week. NAR's committees met too to explore how Realtors will be affected as the latest demographic, technological, and legal changes arise to shape their industry. And the National Association of Realtors Board of Directors met to vote on policies to keep Realtors integral to transactions. You can get all the news and resources from the conference at nar.realtor by searching 2017 Realtors Conference and Expo. Our other big story this week, House Republicans have released tax reform legislation, and it's tough on the people who already contribute the highest share of taxes in our country, homeowners.
Today, the first and oldest committee in Congress, the Committee on Ways and Means, begins consideration of the Tax Cuts and Jobs Act.
Although NAR supports tax reform, this bill would eliminate the distinction between owning and renting by drastically paring back or cutting altogether itemized deductions, which have been integral to our nation's support of homeownership for 100 years. In one of the bill's toughest hits to homeowners, it imposes a $500,000 cap on the size of all new mortgages for which you can take the mortgage interest deduction. That's half the $1 million limit today. And MID would be eliminated for second homes and equity lines of credit. It also caps the state and local property tax deduction to just $10,000. All other itemized deductions, with the exception of the one for charitable contributions, go away altogether. What's more, the capital gains exclusion that households take when they sell their home would be made much harder to use. As you know, that exclusion applies to sales proceeds of up to $250,000 for an individual and $500,000 for a married couple. But you'd have to live in your house for at least 5 of the last 8 years to take that exemption under the bill. Right now, you only have to live in the house for 2 out of the last 5 years. And the value of the exclusion would decline for higher income households. Already, hundreds of thousands of Realtors have sent emails to their members of Congress saying the bill is a tax increase on middle-class homeowners.
This proposed tax reform could place us in a situation where we have a housing crisis from a value perspective.
My biggest concern is don't take it away. For some individuals, it's the only deduction they have. If they have nothing, I have many friends that's the only thing they have, and their accountant says, don't pay off your mortgage, you need that tax deduction, and don't let them take it away.
$500,000 cap in my market in South Dakota, that's okay, but we got a lot of people that don't live in their homes for 5 to 8 years. We've got people that come in, buy a home as a first-time home buyer, build a little bit of equity, sell their home in 2 to 3 years, as a step-up buyer, do it again, and that's what they're doing. They're using that home ownership to build their equity and improve their quality of life.
You can send an email too at realtoractioncenter.com. Tax reform is not the only issue important to Realtors that's on the agenda in Washington. Lawmakers are starting to look at how to reform our nation's mortgage finance system. At a hearing last week, Kevin Brown, a Realtor in Oakland, California, went before the House Financial Services Committee to explain why it's so important the federal government continue to back safe and affordable 30-year loans.
The most important thing is the explicit guarantee to preserve the 30-year fixed-rate mortgage. I think out in the private market, if the government guarantee wasn't there, the 30-year fixed-rate mortgage would not exist.
Brown also made the case for a mortgage market liquidity fund. That's NAR's plan to create a rainy day fund using Fannie Mae and Freddie Mac's own revenues, which today are being transferred out of housing and to the federal treasury. And that's our show for the week of November 6th. Now, if you were here for the conference and expo, thank you for coming. And also, if you've answered NAR's call for action on tax reform, thank you for that as well. It helps American homeowners, and it will help our industry. Now, of course, you can get more on everything we've talked about today at the Voice for Real Estate page on nar.realtor. And be sure to join us again as we bring you the latest news on the Voice for Real Estate. Brought to you by the National Association of Realtors, your advocate for housing and property rights in Washington, across America, and in your neighborhood. This is the Voice for Real Estate.